Hello everyone. In my last video, I explained about 4 different dates which we generally come across in dividends. Today, I will explain how the fund accountant will account a dividend into the fund and what are the aspects we need to keep in mind when we account a dividend. So, for dividend from a fund perspective, the most important date is X date. When a security is going X date or XD, on that day, a FA or a fund accountant need to create a provision for it into the fund. To understand it more better, I have created one example. So these are the 3 assumptions we are going to take to understand this. First assumption is there is a company ABC. That company is going XT on 1st of July 2022. The record date for it is 3rd of July and the pay date is 1st of August. And the rate for which company ABC is distributing dividend is 0.4. When it is written that rate is 0.4, that means 0.4 per share. So to explain it for the beginners or for who is very new to this, that 0.4 means if you are holding 100 share, for each one of the share you will be getting 0.4 rate dividend. So now we can go to the next assumption that there is a fund MPT which hold 100 shares of ABC. And the third assumption is that ABC market price on 30 June 2022 is 50 rupees. 30 June means the company is going XT on 1st of July. So this is the 30 June price which is 50 rupees. And the market price on 1st July, which is on the day it is going XT, is 49.6 rupees. So now if we go with this assumption for the fund MPT on 1st of July, it is going to get the dividend. So you may say that no, the company is going to get the dividend, the company is going to distribute the dividend on 1st of August. Why I am thinking about the X date. But always remember, we have to start creating the provision on the X date because all the scenarios or all the things happen on the X date. On the X date, I know that I am going to receive that dividend after 1 month, which is 1st of August. So I will be creating a provision which is called income receivable, which will be under my period income of my asset. And I will have it under my receivable bucket from 1st July to 1st August. On the 1st August, when I know that I am going to get the cash, I will be moving it from the receivable bucket to my cash bucket. So it will be cashed. So it will not be under my receivable, it will be under the cash. And as I said before also, that generally in the fund accounting we do a reconciliation. So from a fund accounting perspective, we will only see that on the 1st August we are supposed to get the cash and we will move it into the cash, where my other counterparty, which will be custody will check whether they have actually got the cash or not. If not, then they will still show it as a receivable. So now, if we see for this example, as I said that I hold or fund MPT hold 100 shares of company ABC. So let me explain it in details. So fund MPT is having 100 shares. So as I said, the rate is 0.4. So how much dividend I am going to get? On 1st July, I am going to get 40 rupees of dividend on 1st of July. So then if you think of it, for MPT asset going to increase for 40 rupees. And if that happens, then MPT NAV is going to increase for 40 rupees. So do you think that MPT NAV is going to increase for 40 rupees and it is going to impact the fund? So that is also one mistake which everyone does. And please remember, as a fund accountant, you should always keep it into your mind that never ever a corporate action should impact your NAV. Okay. So this is one of the thumb rule when you are planning to become a fund accountant, that always remember the NAV should not impact for any corporate action. So how it is going to be? So let me explain that to you. So when I am having this dividend going to increase, so let's say what is the NAV formula? So NAV is nothing but my asset minus my liability divided by numbers of shares outstanding. So I am going to keep coming back to this example, this formula again and again, this NAV formula. People who know the NAV formula, they might think why I am coming back again and again. But for the people who are newly starting about fund accounting, this is some of the basic and you should know it. So NAV will always impact on these three factors. So in this case, when I'm saying about the dividend, it comes under your asset. So what I'm saying is, your asset going to impact. So what will happen? If I say now my company ABC asset value. Let's calculate the ABC asset value on 30 June 2022. So what are the components which is going to impact my asset value? That will be the dividend or the income plus market value, right? So on 30 June, what is the dividend? 0. I don't have any dividend. What is the market value? 50 rupees into 100 shares. So what it is going to be? 0 plus 5,000. That means 5,000. So I am saying on 30 June, my market value or the asset value for ABC is going to be 5,000. Now next, let's assume what is going to happen on 1st of July 2022. So my dividend income, as I explained here, my dividend income is going to be 40. So before only, when I have taken the assumption, I said on 1st of July, my price is going to be 49.6. So it is going to be 49.6 into 100 because I'm holding 100 shares. So 40 plus, it will be 4960. So it is going to be again 5,000. So if you see here, what I am telling is that even if in both the days, your asset value for company ABC is going to be same. Why? Because even here, your dividend value has increased this, your price has dropped. So this is the thumb rule. And to explain you this more better, always remember, before the X date, whatever price you have, that price is known as X price. This price will be always known as X price. And sorry, I'm extremely sorry. This price is known as cum price. And after the X date, which is on the X date and after that, this is called the X price. So cum price is nothing but the price comprises of the dividend, because the company has still not declared the dividend. Dividend is nothing but their earnings, right? Their extra earnings. So that impact the price and price will be high. But when they are distributing the dividend, they are actually cutting down the earning. So that's why the price is going to drop. So this is the basic thumb rule for any distribution, for that matter. Even if you come across for any mutual fund distribution or any security distribution, the price is going to drop. So that way it is going to balance your asset, and that is never going to impact your NAV. So this is one of the example how a fund accounting going to account for the dividend. So that is all. Next time I will come with more of the examples how we use other different factors in fund accounting. Keep watching. Thank you very much.